Hi, folks, and welcome back to the Short Vol Show Live. My name is Dave, and I want to apologize first of all to you for the mix-ups earlier today. I know that the sound was not on in a video, and I know it has to be frustrating to turn on a YouTube video and not be able to hear it, so I apologize for that. Pretty much everything was going wrong at the same time. The other thing that went wrong was that the doorbell started ringing like halfway through the broadcast, and my sister's been in town lately, and I should have just left it, but I didn't know if it was some sort of family thing, and I ended up stopping the broadcast for a sec to go to the door, and it was like some maid lady who was just ringing all the buzzers, and so I don't know, that was frustrating. But that broadcast just wasn't meant to be, apparently, because I had sound problems as well. I hope you can hear me a little bit better now, and I have to go ahead and check ahead of time and make sure we don't have those sound problems moving forward, and check in with the people who are watching in the live stream to let me know, because they were letting me know, but I wasn't watching. Anyways, let's get to the what's going on today. And I have changed things around quite a bit really quickly. And so let's get to that. And let me go to the chat here for a second. And am I doing that right? Let's see. Show chat. All right. So that is a little bit better. Great. So welcome everybody to the program. And today I wanted to talk a little bit about volatility first and the VIX. And we are just on expiration right now. So if you are short and playing to the short side, this is a good time, if any time is a good time for stuff to pop, because the futures are pretty far off from spot. So even a decent pop in spot isn't going to affect the futures as much as it would at some time. So if we look quickly here, let's take a look first of all at the VIX Central. And the markets are closed right now, so this isn't going to be, spot is not updating, of course, but we see that the futures are back down to showing 4.86% contango as we start the new month, and we see the distance between spot and the futures is almost 2 points. So that creates a lot of shock absorbing for a little pop. So don't expect this to perform well to the upside if we get a continued down move tomorrow. We did get the pop on the close. And I put on a position in UVXY today, and maybe I just walked right into trouble, but we'll have to wait and see. And what I did was I started out by actually going to the long side. I bought a December 27.30 call vertical. So I bought the 27 call in December, and I sold the 30 call, and I paid 78 cents for that. So when you've got a something that you're paying 78 cents for, and there's 156 days until expiration, then you don't really have to worry too much about theta decay, because even if it was decaying evenly over time, that's still like a cent every 2 days. So my idea was to buy something in December to the long side, and then either hang out until we get a pop, or sell something against it to help finance it. So I did buy this spread right as we did get a pop today. And let's take a look at the chart for the day in UVXY, and we can sort of tell this story to you. So here is the here is kind of like the story of the day in UVXY. Let me get out of the way here, and we can kind of tell the story a little bit better. So if I move over here, it still isn't super clear, but let me see if I can get a better perspective. Essentially, let's see if we can back this down a little bit. Okay, so we came into the day, and we got this pop, and I bought the spread right around with the UVXY. Let's see. Okay, so here UVXY was around just under 26, and I bought this D spread. And then we continued to move higher, so I was like, quick, sell something against it. I need to sell something against this. So I looked and I said, well, what if I sell the exact same call spread in a closer month? And I looked, and with 9 days out, it looked like I could sell the same spread, the 27.30 spread. I could sell that same spread for like 60 cents. So that way, if UVXY is below 27 on expiration in 9 days, I've financed 3/4 of this the spread out to December in just a week. So I was like, oh, that's a great deal. So I ended up selling the July 27.30 call vertical against the December one. Now, when we're selling July, that's going to net get us short deltas because the July 27 call is going to have a higher short delta than the December one because July, there's more certainty right in the front months than there is way farther out. So this net gave me a delta of like short 150 deltas. So and I kind of chased it down. I hit the bid because it was right after, as we were spiking, that I was trying to sell this spread. So it was locking in good prices versus the call spread I had bought. Like I bought this the first spread when we were below 26, and then we were like 26.40 as I sold the second spread against it. So it was a good leg into these two spreads. So I chased it, and I was able to sell the July spread, not for 62 cents where I wanted to, but for 58 and then 56 cents. So, but still a good deal, and still net only costing me 20 cents over time. And then right after that, this created a short delta for my position, and right after that, stuff tanked. So that was great. And once stuff tanked down to like 25.80, 25.75, then I actually sold some of the at-the-money puts in the front week against my position. So I was all over the place today. So stuff went up. I locked in a little move, and then I got short at the top, and things went back down. And then I sold puts and locked in a little move here. So I sold this. I'm still in the way. I seem to be always in the way here. I ended up selling these with 2 days to go. The 19 July 26 puts. I sold some for 64 cents. Or I sold one for 64 cents, and then I sold this 25.23 put spread. I sold that for 29 cents. And so kind of flattened out my delta at the bottom. And then I went ahead and I bought some just naked December 27 calls. I bought December 27 call I paid $6.40 and $6.45 for two of those calls. And I sold some front month stuff against them. So basically just buying back month stuff, selling front month stuff against it. Ending up with kind of an interesting position here. If we look at the Greeks for this position, I am, as it turns out, I'll get out of the way there. If we look at the Greeks right here, and I need to make sure that we are, that this is on the right date. Okay, so if we look at the Greeks right here, it shows me short 71 deltas, collecting a little bit each day. Now we are on the, and let me make sure I have unclicked some of these things, so let's fix this. Okay, so with my position, I'm collecting $37 a day, short 132 deltas. And if we look at the chart for my position, if I get a spike, I'm going to lose money. But if it spikes high enough, because I'm net long units, remember how we talked about not being net short units, especially in something that can spike like this? Because I'm net long units, if we actually did spike like a big time, I actually I have a break-even point. If we spike all the way up, back up to like 100 or something, I break even. But regardless, I have this interesting position on, and what I would like to happen is we just go right back to the 26 strike and sit there. That would be the best thing for me. The marks on the close were atrocious, and you can expect, if you're trading UVXY, you can expect that your P&L is going to jump around because they widen everything out on the close, and it showed me all of a sudden I went from being up $200 on the day to being down $851 just because marks on the close, but that isn't real. And we can actually figure out why it's showing me losing money. And if we look at the marks, for example, if we go over here and look down to my left there, the marks for the December 27.30 call spread, we see it's being marked at like 23 cents, okay, which is ridiculous, right? Because, and we paid 78 cents for that. It's being marked at 23 cents, and the July spread is being marked way, way higher than that. So that's where the discrepancies come from. It shows me losing, $650 on this one December spread that I bought, and it's only because the markets are so wide. If we pull down December, we can see this market for these calls, $5.15 bid at $7.25, and then the 30 calls, $5 bid at $6.95. Now, they widen stuff out in the last 15 minutes just kind of because they can, and they hope that somebody will pay the offer on one of these things, but this isn't real. You need to just keep tracking your head. It's a slight annoyance that stuff gets marked against you, but sometimes it gets marked for you. It's just kind of the luck of the draw. But that's just kind of white noise that you can't worry about. Okay, so BYND, I did end up taking off my position in BYND today. This has been a big winner for me over the last month. I was short these strangles. I was short, okay, remember BYND, Beyond Meat. I came in today short the November 115 200 strangle, the Jan 125 240 strangle, the September 110 220 strangle, and those all had made me decent money, and I said, I've been on a great run, let's lock it in and move on to some other stuff. So that's what we did. Okay, CVNA, Carvana. Now, we've been talking about this a little bit. I was talking about selling straddles last week, and if you had actually followed that trade, it didn't turn out to be a great trade because we've moved away from that 65 strike. However, I did leg into a little something today. Stock got down to 61, and I did sell one of these 60-55 put spreads in August. Then we rallied back up a buck or so, and I sold an out-of-the-money call spread against that. So legged into these two spreads for good prices. And then I was looking at this November Condor, and this $5 Condor, the most it could be worth was $5, right? And I sold it for $4.50 or $4.55, and I think that's great because you sell it for $4.55. The most you can lose is $45 on it, and if by chance we stay between 60 and 70, then you stand to actually do better than that. So I kind of like that Condor. It's a while till it expires, 121 days. Not a whole lot of risk there, but I love selling something that the most it can be worth is $5. I love selling that for $4.50 because your downside is so small. So UVXY, we got a pop today that due to these markets selling off. We are near the highs. Nothing serious as far as damage, I don't think, to these charts, but we'll have to wait and see. Look at this chart. I mean, this is the story of the market. Just off new highs again, and until that changes, it seems like we are bullish on the market, and the market continues to rally. We'll have to see what happens tomorrow, but that's where we stand. Once again, sorry for the sound problems earlier in the day. These things do happen, however. As far as entertainment news, been watching Big Little Lies. It's very frustrating that the show is probably going to end after this second season. They've come up with all these excuses. Oh, well, we can't get the actresses are not available for a third season because they're working on other projects. It's like, what can be more important than a hit HBO show that you've got to go work on some other project? I just think that's a weak excuse. And I'm hopeful that they will pull together for a third season. I think they can do it. When the first season was over, they said there wasn't going to be a second season, and they pulled it together. So my hopes are that there is a third season of Big Little Lies. I know that there were problems behind the scenes with the production of this show. They the first season they used Jean Vallet as the director, and they pulled the director and they brought in this second director for most of the second season, and then they pulled her at the last minute and brought the guy from the first season back and re-edited all this stuff, and they kind of butchered some of it, which is unfortunate. Once you go with the director, you should just stick with that director, but I know there's pressure from above on HBO and all this politics and stuff, but I think they kind of messed with the show by doing that. Stop strangling your meat, you say in the chat. Very funny. But strangling Beyond Meat has been working for me, so that's why I keep doing it. Thanks to all for all the support from everybody. I appreciate my loyal listeners for watching, and let me know what you want to hear about as far as options. I did have to bail. I ended up bailing on my MNK position today because it just seems hopeless, and I don't want to, I want to cut my losses. I had a little loss on this one, and this seems like the trend continues lower on MNK, and I just don't want to be caught holding the bag here. So, I took a little loss on this one, but it was a couple $100 and I got out. I'm done. Thank you. Goodbye. On the reverse, ACB had a nice winner, and that offset the losses at MNK, and so I just kind of bailed on both of them today and went back into cash for the 401k thing. So I'm back to cash. I'm just trying to keep stuff tight to the vest. I've had a good year so far, and I just want to hold on to it. Very important to me to just hold on to it because, want to move forward with that positive year intact. I want to put up on the boards a nice positive year, and I'm not going to let anything take that away from me right now. So that's where we stand. BYND's been staying in orbit. There's possibility I might jump back in at some point, but we do have earnings coming out on the 27th, which is, a week and a couple days, and I'm thinking I might just hang out with no position through earnings, see where that brings us after that, and move on, because I can see this thing having a little gapper on earnings, and I can also see volatility expanding between now and earnings. So it's, when you've got a stock where volatility's come in a lot like this one, you could have a situation where you're short, premium or strangles or straddles, and the stuff doesn't decay at all in the last week or two before earnings. Every day you come in, it says volatility is a little bit higher, and that straddle that you sold for, $20 stays $20 bid all the way to earnings. So, the question is where will this be right before earnings? Is it worth playing? I think we could easily get a little bit of buyers coming in right before earnings. Things has been relatively calm lately. The people that have been making bets to the up or down. I know the shorts have been getting burned for a little while in this one, but longs haven't been making huge money either because we've just kind of stayed in this one little orbit. So I don't know if premium buyers are going to want to come in. I know that being long premium hasn't worked for people for the last month or so people might be gun shy, but I am certainly gun shy about having some big gap that ruins my positive P&L for the year in this one. So I'm just hanging out. It's very hard for me to just take money off the table and not have some sort of risk on. So knowing myself in that way, I'm forcing myself to take risk off and to just reflect on having money in the account. That's where I stand right now, and hopefully this helps you in your own trading endeavors. Good luck to everybody, and I will talk to you shortly. I do have time tomorrow for a show, so we'll probably come back on tomorrow for another show. So join me here, and we'll find out what happens next in the exciting world of UVXY and BYND. Thanks for watching, folks.